Well, what in the world is happening to the almighty dollar? Currently, it is struggling to regain precious ground against other major world currencies. Are weak retail sales to blame, or could it be multiple factors? Well, our expert here, Peter Cardillo, chief market economist at Rockwell Global Capital, joins us now. Peter, my goodness, I'd say a few months ago, people might not have predicted anything like this. A strong economy, now the dollar is shrinking. What's going on here?
Well, I think, it's just basically a technical correction. And this technical correction is coming from two factors. One, the economy is not as strong as we anticipated it to be in this quarter. And the problem with that is that the consumer remains quite cautious. We had gasoline prices tumbling over the past several months, and then, of course, there's been a little bit of a backup now. But yet, people have chosen not to spend that disposable income. So they're basically saving and they're paying down debt. And I think that's, one of the reasons, the weak economy. And the other thing I think, we have to look at is that the dollar is still relatively strong if you look at where it was a year ago or 2 years ago. So I think it's just in a technical correction. Do I see the dollar tumbling much further from these levels? No, I don't.
Okay, well, look, that's good news as far as I can see of what you're saying here. But let's unpack this a little bit. Retail sales. I go out to the malls, shopping around with my wife and so on and so forth. I see people all over the place. They're buying food, they're buying clothes. Exactly what are you talking about when you say retail sales?
Well, we're talking about, first, we're not seeing a real strong spending in luxury items. That's number one. Consumers are out there spending. They're always spending, but they're spending on the necessities. And when they do go out buying for clothing or other necessary everyday wear, it's usually on a bargain hunt. And so what we're seeing is the imported merchandise going off the shelves because of the weaker euro that we had from the previous year. So a lot of these import prices have come down.
We've talked about a roller coaster ride on the stock markets to a certain degree. That might be exaggerating a little bit here. And we also talked about, you mentioned this about a correction in the dollar. A correction in the markets, Peter. Do you think right now with a weak dollar that might affect the markets, even though today, as we've reported, the markets are up? Well,
to begin with, I've been bearish on the equity markets here for the past several weeks, and so far I've been wrong. The market just remains trapped in a trading range. It's sort of like in a cage. It can't get out of it, And the reason for that is that there's no alternative factor. Now, that brings us back to the question of interest rates. Now, just a few days ago, we saw a spike in yields from we had a huge correction, which actually began in Germany with the German bond market and spilled over to the United States. We saw the 10-year yield actually move up to about 235, and now it's back on around 222.
We got to talk more about this. You got to come back and talk more about that too. Okay. Thanks a lot, Peter. All right. Coming up, how Tesla wants to power your home with a battery. And you're watching Arise Exchange. Stay with us.